One of the most common things I hear from people thinking about moving to Orlando is, I looked it up online and the numbers seem too good to be true. They're not, but they're also not the full picture. So today I'm going to walk you through every single line item, what it is to actually live in Orlando in 2026, including the things most relocation guides completely leave out. By the end of the video, you'll be able to build a real budget for your move. Welcome back, I'm Gianni Almeda, Orlando Relocation Specialist, and today we're doing a full financial breakdown of what it costs to live here in 2026. This is the video I wish existed when people first started asking me whether the move made financial sense. Here's the problem with cost of living calculators you find online. They average things across the entire metro and miss the details that actually matter for homeowners specifically. Things like homeowners insurance, HOA fees, the true cost of utilities in the summer, and the financial benefits only available to primary residents. None of these show up accurately in the generic calculators. So today I'm gonna break it all down. Housing, insurance, taxes, utilities, HOAs, groceries, transportation, and then I'm gonna show you the actual net financial picture when you factor in Florida's no income tax advantage. Let's get into it. Let's start with housing since that's the biggest number. The median home price in the greater Orlando metro in 2026 sits in the mid to upper $300,000 range. But the median masks enormous variation across neighborhoods. In Kissimmee and some eastern suburbs, you can find a solid single family home in the 280s to 320s. In Lake Nona or Winter Garden, you're more typically looking at 500 to 650 for a well-positioned family home. In Windermere or Dr. Phillips, you're starting at 700 and the ceiling is wherever you want it to be. Let me give you a monthly payment picture at a few price points using current rates because this is what actually matters for your budget. At $350,000 with a conventional 30-year mortgage and 20% down, you're looking at roughly $1,700 to $1,900 per month in principals and interest only. Depending on your rate, plus insurance and taxes, bringing that approximately to $2,400 to $2,700 all in. $450,000 with 20% down, that brings you to roughly $2,200 to $2,400 a month in principals and interest only. You add insurance and taxes, that lands you around $3,000 to $3,400 a month total. At $550,000, you're in the $3,500 to $4,000 range all in, and that's depending on your insurance. Now compare that to what those monthly payments get you in terms of space. At $450,000 in Orlando, you're typically looking at a 3-bedroom, 4-bath, 2,200 square feet to 2,800 square feet, often with a pool and a lot of space for one. Now compare that to what those monthly payments get you in terms of space. At $550,000 in Orlando, you're typically looking at 3 to 4 bedrooms. The home sits about 2,200 to 2,800 square feet, often with a pool and a lot of space for one. In a community with strong amenities, the same payment in New York, LA, or Boston gets you something dramatically smaller in a drastically less desirable area. Okay, here's where I need you to pay close attention because these are the costs that constantly surprise out-of-state buyers. Homeowners insurance. Florida's homeowners insurance market is generally more expensive than most states, and it's been getting worse and worse. For a typical $400,000 to $500,000 house in Orlando, budget $2,500 to $5,000 a year. That's $210 to $415 per month added to your housing cost. The biggest factor in your premium is roof age. A home with a roof under 10 years old gets dramatically better rates and more carrier options. The one with the 15-plus-year-old roof, when I work with buyers on resale homes, we always check roof age before we write an offer because it directly affects your insurance situation. You can also reduce your premium meaningfully with the wind mitigation inspection. This is a report that documents hurricane-resistant features of your home like roof-to-wall connection and window protection. A good wind mitigation report can lower your annual premium by 20 to 40%. Always get one. Flood insurance. If your home is in a zone AE flood zone, which is high risk, your lender will require flood insurance. As a separate policy, this can add $1,000 to $3,000 plus per year. Most of suburban Orlando sits on Zone X, which is low risk and typically doesn't require mandatory flood coverage, but always verify the specific property before you buy. Electric bills. This is one of the ones that catches people off guard. Florida summers are hot and your air conditioning runs hard from June through September. Budget $200 to even $400 per month during these months. Annual average across all 12 months is typically $150 to $200 per month. HOA fees. The majority of desirable communities in Orlando, especially new construction or master plan neighborhoods, will have one. Those range from $100 to $200 per month in basic communities to $300 to $600 per month in premium master plan communities. Make sure you budget accounts for this before you fall in love with a new home. Property taxes in Florida are actually one of the best parts of the financial picture, especially compared to what most of my clients from New Jersey, Illinois, or New York are saying. Florida's effective property tax rate sits between 0.8% to 1.2% of the assessed value, depending on the county. For a home assessed at $450,000, that's roughly $3,600 to $5,400 per year before any exemptions. Now here's where it gets significantly better. The Florida Homestead Exemption removes up to $50,000 from your assessed value for property tax purposes, and you qualify for that the moment you establish Florida as your primary residence. And file by March 1st deadline, the year after you purchase, on that $450,000 home, you'd be taxed as if it was worth $400,000 at a 1% effective rate. That's $500 per year directly back in your pocket. And the Save Your Home Protection Act is even more powerful long term. Once you're homesteaded, the law caps how much your assessed value can increase year over year at just 3% or the rate of inflation, whichever is lower. So even as Orlando home values appreciate, which they have consistently, your tax bill is protected from running away and increasing exponentially. One critical thing, the homestead exemption does not apply automatically. You have to file for it with your county property appraiser by March 1st of the following year you purchase the home. I walk every single one of my relocation clients through this because it's so easy to miss. Okay, now let's get to the day-to-day living costs quickly, because those are generally favorable and more straightforward. Groceries and everyday consumption expenses in Orlando run approximately 5 to 8% below the national average. You have a strong option across price points. Publix is the dominant local chain, and it's excellent. Costco and Sam's Club are well positioned across the metro. Trader Joe's and Whole Foods locations exist in the entire Orlando metro area. Transportation. Orlando is a car city. You need a vehicle. Full stop. Budget for a car payment, insurance, and gas as a core monthly expense. If you're coming from a city where you don't need a car, the good news is Florida car insurance rates are in the middle of the pack nationally. Not cheap, but not the most expensive. Tolls. If you're using the 417 or 408 or even the Turnpike regularly, which most people in the suburbs do, budget $100 to $150 per month in tolls. Get a SunPass transponder immediately after you move. It's cheaper than cash and it saves you time. Dining and entertainment. Orlando has a genuinely strong and growing restaurant scene, and you can find excellent food across every price point. A dinner for two at a nice restaurant will run you $80 to $130. The theme park's proximity is a lifestyle asset. Annual passes for Disney, Universal, or SeaWorld become real considerations for families, and the prices vary significantly by tier. Healthcare. Central Florida has a strong healthcare infrastructure, particularly in Lake Nona Medical City Corridor. Costs are in line with or slightly below national averages for most common procedures. Okay, now let me put the whole picture together, because this is the part of the conversation most people never have. Let's use a real world example. A family earning $180,000 per year, moving from New Jersey to Orlando. In New Jersey, you're paying approximately $10 to $13 per year in state income tax. Moving to Florida, $0. That's $10,000 to $13,000 per year in their household income back in their pockets every single year. They're selling the home in New Jersey that was maybe $650,000, a modest 3-bedroom. With that equity, they're buying a 4-bedroom home in Winter Garden or Lake Nona for $500,000 with a pool. Their monthly housing costs may actually be lower, and their square footage has significantly increased. Property taxes in New Jersey, effective rates run 2% or more. On a $650,000 home, that's $13,000 per year or more. In Florida, after homestead, on a $500,000 house, they might be paying $4,500 to $5,000 per month, saving them $8,000 to $9,000 per year. Insurance does cost more in Florida, so let's call it about $1,500 per year. Electrical bills run higher at another $600 per year. HOA is new, add $2,400 per year. Net financial improvement in the year before even considering housing equity is roughly $15,000 to $20,000 in after-tax, after-expense income, with significantly more house, a pool, and a warmer climate. This is why the math works for so many people. It's not just about the lifestyle, it's a legitimate financial upgrade for the right household. If you want to run this analysis for your specific situation, your income, your current home, your target price range, that's exactly what we would cover in a free 30-minute relocation strategy call. The link is in the description below. Please drop a like, subscribe if this was helpful. I drop 2 of these videos every single week, all about moving to Orlando. And drop your current state in the comments, and I want to run the numbers for you.